Welcome back to Brazil Crypto Report. Today I'm joined by Kim Grauer, Director of Research at Chainalysis. We dive into the key findings from the Chainalysis 2023 Geography of Cryptocurrency report, and specifically how Brazil and Latin America rank in crypto adoption compared to the rest of the world. Okay, amazing. So we are here today with Kim Grauer, who's the head of research at Chainalysis. Kim, it's great to have you on the show.
Thanks for having me.
Amazing. It's great to have you back. I think I had you maybe about 18 months ago, back when we first started up this podcast, actually. So it's we love our repeat guests. Great to have you back. Why don't you give yourself a quick introduction and who you are and what you do at Chainalysis?
Yeah, thanks for having me again. I remember the last time I was on the podcast for this report. And my name's Kim Grauer. I'm the Director of Research at Chainalysis. I have been at Chainalysis for over 6 years doing various forms of public-facing research. We try to extract insights from blockchain data and put the most interesting stuff in these long 100-page reports. Our crime report comes out once a year where we really zone in on crime events. And then we also just try and tackle anything we can that might be of interest to, I think we like to tackle the most burning questions. So what are the questions that are the hardest to answer that the industry needs to know the most? And we tend to really zone in on those on my team.
Very cool. Yeah, and it's definitely the gold standard, I would say. I mean, not to try to flatter you here, but like I just find like the Chainalysis reports tend to be just kind of the gold standard as far as blockchain research and analytics goes. There's just few, if any, comparable products out there on the market right now. So congratulations on really just some awesome findings.
Thank you so much for saying that. Thank you.
Yeah, and so maybe just to get started, why don't you talk a bit about, just give us an introduction to this Geography of Cryptocurrency report, and like how long have you guys been doing it? What are you looking for? What's sort of the impetus for doing it in the first place?
I believe this is our fourth, maybe fifth iteration of the Geography of Crypto report, probably fourth, potentially fifth. And what started us doing this is 5 years ago, we were, like I said, doing a lot of crime research, and our probably the biggest number that's associated with Chainalysis is that 1% of all transactions are associated with known illicit wallets. And we really work to break that down and emphasize what that is. And I remember we were talking to our CEO, Michael Grauer, who's the best, and we were presenting him some of this research, and he was like, okay, great, but what about the other 99%? And I just have that burned in my mind because I was like, oh, interesting question. And the truth is that's a much harder question, because when you receive money from a ransomware wallet, it's very clear what's going on. But when you receive money from an exchange or between two exchanges, there's many different types of activity that could represent. And so we didn't have a really smart, good way of answering that. And when we went to the drawing boards, we tried to, okay, what are the transfer sizes? What are the times of day of these transfers? And the real kind of aha moment was when we started incorporating geographic information. And we realized that the reason why that's so hard to answer is because there's a strong geographic component to that answer. People around the world use cryptocurrency for many different reasons. And when you start to break down what's happening in specific countries, the question becomes a lot more manageable and easier to answer. So what's happening in Hong Kong, what's happening in Nigeria, with our geographic data, we can really triage those questions more effectively than kind of this amorphous, how are people really using cryptocurrency? Because especially in the North America and the United States, people are so ingrained in their own circumstances, so their world, that they wonder, oh, it's just financial entertainment and gambling as to why people are using cryptocurrency. But in reality, there's so many other things. So the Geography report was trying to flesh out all those use cases, and that's where it began.
Amazing. Thank you for that background. Yeah, that makes a lot of sense, right? It's like, what about the other 99% of people that are using this for, non-illicit things? Like, who are these people? What are they using it for? Like, why is this of value to them? And yeah, that's a great way of framing it, right? And a great way of kind of countering, maybe a reframe of some of the current narratives around crypto publicly, right? Which are not, maybe the most flattering at the moment. So I'm going to share my screen here. And we're pulling up some of the actual report from this year. And for those who are just listening to the audio on this, we will be as descriptive as possible. But I am sharing my screen here. We'll be walking through some of the data, some of the slides. So starting off here, you have the top 20 countries ranked by adoption globally. Brazil comes in at number 9. We have a couple of other LATAM countries, Argentina and Mexico at, I believe, is 15 and 16. And basically, like, this overall index ranking is a composite of 5 other kind of sub indices, essentially. And Kim, I'm just hoping you could maybe walk us through what are these different kind of sub indexes, and then or indexes or indices. I never know how to say that, but whatever. Maybe walk us through what each of these things are and what you're trying to measure with each of these.
Well, what I think the reason why we're doing this, you see this data here, is because we're trying to capture adoption by region, by country. But no, it's really hard to compare countries with vastly different populations and GDPs directly to each other. So how do you compare Brazil to UAE? Totally different economies and population sizes. So the first thing that we wanted to do with the index was make it so that we can compare directly countries. So everything in the index is weighted for population, GDP, purchasing power when appropriate. But then once you account for that, then you have an even tougher question of what does adoption mean? What does adoption mean? What's the number? Is it the number of users? Maybe. Or is it the way people are using cryptocurrency? Is it if there's grassroots adoption? Is it institutional adoption? Is it people using it for commercial purposes? There's so many ways that you can think about measuring adoption. There's not just one number. This is the adoption. So the 5 sub indices, I'll go with indices, was each of those are a different way of thinking about adoption. And we have centralized value received, retail value received, peer-to-peer activity, DeFi value, and retail DeFi. And each of those are a different component of adoption. So centralized exchanges is just looking at the total value received. Retail is looking at the total value received of small payments less than $10,000. And that's important because we want to weight this index more towards grassroots adoption, everyday people using crypto. If you are at all familiar with on-chain data, you'll know that there's an outlier problem in the sense that one day there will be a $700 million transfer leaving a big exchange, and then all of a sudden you're dealing with completely different data set. So we want to weight things away from the major institutions and towards everyday people. Peer-to-peer activity is also a way to capture that. Peer-to-peer activity is really popular in certain countries where there's less established banking relations with crypto exchanges, and so the peer-to-peer markets really take off. Then we have DeFi, which we added in DeFi about 2 years ago. We kind of realized we were making the index and we were like, shoot, there's the DeFi problem. We are not capturing DeFi data, and centralized exchange data is very different. And I'm happy to talk to you about that, but I won't kind of open that can of worms right now. And then retail DeFi, which is kind of the same concept of retail, but for DeFi. And all of those we calculate, and then we turn each of those into a sub kind of index using just the basic way that indices across multiple metrics are calculated, and then average it out to one number. It's good to capture things in exactly one number.
Yeah, that's super interesting. And I like the way you guys have broken it up, because it does, at least intuitively, it feels like you're covering every area, especially now that you've included the DeFi components. It does feel like you're including the main ways by which people use crypto or transact with crypto, at least. Like, you've got kind of the centralized exchange, kind of the aggregate number, and then the retail number, which is basically anything less than $10,000, and then the same for DeFi, where you have your DeFi whales, then you have kind of your DeFi plebes, I guess, people like me, who are, try to farm our random coins, and hopefully we can sell them to make some money on them, I guess. So that's super helpful as a way to break it down. And then just looking at this list here, so you've got each country, so in the top 10 is like India, Nigeria, Vietnam, US, Ukraine, Philippines, Indonesia, Pakistan, Brazil. And you've got the overall composite ranking, and you've got each of these countries ranked based on each of these sub indices as well. And it's interesting that a lot of these will, like India, for example, comes in number one in every area, with the exception of P2P, where it's 5, which is still pretty high, right? And then but with some of these other ones, there's a bit more variance, right? So like with US, for example, it's basically, top 3 and pretty much everything, with the exception of P2P, and then like retail centralized exchange volumes. So it's kind of, you can kind of extrapolate a bit of the profile of each country just based on these numbers. So I think that's a really really helpful kind of way of looking at this. I want to move over to, I'm going to just moving over to like the Latin America section of the report here. And could you maybe just kind of set us up with some color on just maybe some just big picture conclusions or findings from Latin America? That we've got a couple of charts here on the screen illustrating some of the stats that came out of the report. But Kim, could you maybe just kind of give us an overview of what was interesting about Latin America this year?
Latin America is a really interesting market because of and it's interesting in different countries. So you have Venezuela, you have Argentina, you have Brazil, and then Mexico, and those have really interesting crypto adoption stories for various reasons. On the whole, Latin America this year was about 7.3% of the total global markets. And it's actually been pretty consistent around that level over the past few quarters. There are a few regions that are making moves in their ranking, and Sub-Saharan Africa and Latin America are actually not really one of them. So North America, for example, was surging a few years ago, and now is actually in a little bit of a decline. And what's really growing is Central Southern Asia and Oceania over the past since 2020, and then some like the MENA region, the Eastern European region, and and Eastern Asia are growing. And so Latin America is about pretty consistent growth over time. And if you look at the top countries, you've got Argentina and Brazil that are the biggest adopters in terms of the total value received, followed by Mexico, Colombia, and Venezuela. Those are, you could do a PhD thesis on each of those as to what's driving activity. But on the whole, there is meaningful crypto activity in almost every country in Latin America, where we're able to trace web traffic, meaningful web traffic from people to cryptocurrency businesses. I think that some differentiators of Latin America might be a really high percentage of overall activity happening on centralized exchanges and relative to others, so lower DeFi adoption than in other regions, which I think makes sense with some of the interviews that I had with people where, I mean, you can only draw so many conclusions from interviews, but it was pretty much, we don't care about crypto or technology and blockchain. We care about preserving value. This was particularly true in Venezuela and Argentina, where there's not this kind of people who are passionate about crypto, and where you might find a crypto bro in the United States. It's really about preserving value, and that being kind of the only options that they really have to get a bridge to the dollar.
That makes sense. Much more of a pragmatic use case, right? Rather than an ideological thing, essentially.
Yeah, exactly.
And I guess one other point that I found interesting was that it says on this chart here, it says Latin America comprised about 7.3% of total cryptocurrency received in the world during the period measured July 22 through June 2023. And that 7.3% is like roughly in line with LATAM's, like the total like world population. I think it's the world population is like, it's like 8% of people in the world live in Latin America. So that number is, I guess, where you would expect it to be, I suppose. You can maybe argue it's even punching a bit above its weight in that sense based on their total population. I'm just going to move on to the rest of the next charts here, and really quickly, or however much time you want to spend on these, I guess. But this is just we're looking at some charts here that are basically looking at just regional transaction volume by transfer size. You have like large institutional, all the way down to like smaller retail. And we've got some nice kind of bar graphs that are sort of mapping that out based on like those types of transaction sizes based on region. But anything noteworthy you want to share from these charts here?
Oh, I talked about the second one a little bit, where you can see LATAM has a little bit of a higher centralized exchange adoption rate. The top chart on transaction volume is where we segment out the transfer sizes and then attribute them to regions, so you can see what share of all transactions are going from regions are in each region. And here you can really see the problem with outlier activity, where how much of the activity is in those large institutional or institutional sized transactions. And there's a healthy variety in Latin America, as with every region. The only kind of major takeaway from this slide is that North America has an insanely large institutional market relative to other regions. But Latin America, you've got a little bit of everything. You've got small retail, large retail, professional, institutional, large institutional happening in all the places you would expect it.
Yeah, Latin America almost has the identical profile here to Eastern Europe, which is maybe not surprising, but also to Eastern Asia, where I would have assumed that there'd be a lot more kind of like large institutional sized transactions coming out of Asia. So that was a bit of like a surprise to me. I would expect, but maybe there's just enough smaller retail and professional sized transactions there to kind of offset some of the institutional ones. But I was expecting to see more institutional activity out of Asia. Anyway, so that's very interesting. And then we're going to move.
I would have too. There's a lot of commercial activity happening out of Eastern Asia. Almost every counterpart, when you find examples, which is hard to find, of international commercial activity happening on the rails of crypto, because it's kind of an unreported gray market. So you really have to kind of get people to go out on a limb to talk about it publicly. China is almost always the counterparty of the international transaction. So there's a big commercial component and informal market in Eastern Asia.
Yeah, that's definitely something I've been coming across more and more as well, is how all of these kind of the commercial activity all kind of stems from China in one form or another as a counterparty. And then you devote a bit of a section here on this slide to just talking a bit about how Brazil's transaction volume on a monthly basis, and then kind of how that's compared to previous years. And you've got a nice chart here breaking out the different transaction sizes, or the different transaction segments broken out by month. And I think what's maybe most notable here is that you have a massive uptake in November of 2022, which is when FTX collapsed and people were kind of freaking out trying to get their money out of the exchange, I guess, which probably accounts for the large institutional volumes. But maybe talk us through what's interesting about this chart here. Is there anything noteworthy, or does this more or less track with what you've seen in other regions, or is there something novel about the transaction flows in Brazil during this period?
Brazil is a huge institutional market, and it's a really mature market. There's a lot of businesses that are professionally getting into like kind of a similar kind of hedge fund space. So the only kind of really interesting and unique thing about Brazil from this specific chart is, I mean, if it moves with international, it moves with kind of the what you see across most regions. The only major thing is like the larger share of large institutional payments that we see.
Got it. And you noted here also that in this report and in previous reports that Brazil really resembles more of a North American or European market than a Latin American market, just because of some of that institutional activity. And just wondering, what type of, are you able to discern like what types of institutions might be behind this volume? Is this mainly coming from exchanges? Is it like kind of hedge funds? Is it, we've also had like just a lot of just stable coin usage in Brazil lately. I think like something like 80% of the reported figures are in USDT now. It's like 3 billion a month essentially. So that's really been ticking up. But would be interested if you have any additional color on any of that.
Well, when I looked at the order book data for Brazil, it was closer to 50% Tether volumes, but this was ending, about a while ago. So it could certainly have been different in the month of October and early November. I think that we have seen a lot more examples of institutional activity and hedge funds and Brazil specific large successful services that have been becoming important global players. And I think that has to do with many things. The demand for exposure to these assets is certainly one, but also work being done on the regulatory front to accommodate some of these services. Some of this activity is another kind of open-ended thing that's contributing to the situation. But if we look at order book data, which is different from on-chain data, about 50% of Brazilian activity is stable coins. And that is based in what is traded against the Brazilian real, which might be different than the total traded, because not every trade is going into the Brazilian real. If you have Bitcoin, you might be trading for Tether directly, and then that would not be captured. So this is just what fiat pairs are dealing with. And we show the trading against the Brazilian real specifically to highlight how it relates to the Argentinian peso, where almost 80% of all purchases from the Argentinian peso are with Tether specifically. And in Brazil, there's a higher Bitcoin percentage. So 25% of all purchases with the Brazilian real are Bitcoin. And where they really stand out is altcoins, which to me, this shows is more evidence of the institutional trading activity rather than just what we talked about, practical, let's get exposure to the US dollar. Almost 20% of all the trades against the Brazilian real are in altcoin, and we can compare that to just a couple percentage points of trading for altcoins against the Argentinian peso.
Yeah, that's a super illustrative chart. I'm really glad you guys put this one together, because I think it does highlight the kind of the divergent value propositions in both of these respective countries. If we could maybe turn back to the stablecoin portion again, I guess we don't have a chart on this, but you're mentioning that like basically 50% of, at least as of when you concluded with the research for this report, but 50% of order book data was in stable coins paired with Brazilian real. And it's interesting because basically like the last like data we have from the tax authority here, which people people have to report their trades to, it was showing, I think it was for like either July or August, but it was showing like 80% of the volume was in Tether, and probably about like 85% was stable coins. I think USDC was maybe like 5% or something. And I guess I'd be interested to hear, maybe double click on this point a little bit more. Be like, what do you think accounts for that divergence? Where if you have, I mean, granted, maybe not everybody's like reporting, things accurately or whatever, but like, why would the order book data be different from, or like 30 percentage points different from what's being reported to the government officially?
I think they can both be right at the same time. I mean, there's a lot of different data happening. So people are purchasing at a 50% rate the real for stable coins, but then that's just onboarding from the actual fiat currency. And that's just what we then. In fact, most traders don't want to touch fiat if they're actively trading because that's a taxable event. So there's a lot of but there's a potential that both are true, and one might be more capturing of trading, so people onboard into Bitcoin maybe, and then try and get some gains and pair it with Tether to lock in their gains. And so both can be true. If we just look at on-chain activity as well, that would be another different story to trading activity. So on order book data is what are the actual trades that are being bought and sold. Many of the institutional traders are not going to use an order book. They are going to use an OTC. They are going to just do on-chain transactions. They might even be on DEXs at this point. And so that is yet another data point, and if we just look at the on-chain data, then stablecoins are by far the fastest growing asset. So I don't think we have this chart and I don't want to mess it up, but if you want an up and to the right chart, it's the share of all blockchain activity that is going to stablecoin activity. Has not experienced a decline month in years, and every year it's capturing more and more of the blockchain share. And I think that's probably because of this institutional activity happening on chain, and the fact that over the past few years, I think stablecoins have hit a turning point with their global acceptance. There was a few years back in 2018, 2019, where people wondered, oh, what's happening with Tether? And I think that now people are more comfortable with stablecoins. And I think that that's really reflected in the data.
Well, that's super interesting. And that does seem to be, I mean, that just kind of matches anecdotally, I guess, with all the sentiment and all the narratives we hear from different other actors in the space, right? That the demand for stable coins is not decreasing in any meaningful way at this point. It's really only going up, even despite some of the other woes in the market. One other thing I wanted to just maybe double click on a little bit here is this top chart that we have here that's comparing Brazil retail and professional driven volumes. And essentially what you're seeing here in this chart is that small retail and large retail transaction volumes were basically the same throughout the period measured. There wasn't really a meaningful uptick or downtick at all from July 22 to June 23. But the professional kind of 10,000 to 1 million size transactions, there was quite a bit more volatility, and some of that was due to the FTX collapse. But just kind of wondering, like, is what's significant about this chart in your view? And, I guess how notable is it that, I guess what I found most interesting is that the small and retail volumes were the same basically, even throughout this, frankly, was like a pretty bad year for crypto. But people continued to transact, right? So there's obviously there's some degree of confidence remaining in this space here.
I think it's a really important point what is happening in this chart, and institutional professional activity is exactly what you said. It's pretty volatile. I mean, all activity in crypto is pretty volatile, but it's very susceptible to large news events. What's happened with FTX, you're certainly right. It was a really bad year overall, but retail and small retail remaining consistent, it checks out with how we think of adoption, where adoption is not a crazy headline in the news. People in Nigeria have continued 2%, increases in their adoption over time. We want to see steady, stable, flat and slightly elevated adoption for some of the smaller retail activity. That's sustainable. That's something that you can sustain over a long period of time. These exponential growth of activity, that's not sustainable. And so this makes sense with what we're seeing, and speaks to which segments of the market were most impacted by the volatility of last year, or were impacted by the news of FTX and some of the other stuff that's happening. And so this is another reason why we need to subset out the data based on the potential population of people that are being reflected. So the small retail versus the large institutional is a completely different world of crypto users.
Yeah, absolutely. No, that's super helpful. I'm really glad you guys were able to break this out. That's a very great graphic there. Um, one other question I had, or I have a couple other questions, but what the next question I have is going back to kind of the P2P issue. I'm gonna just go back to our regular view here, but on the P2P front, over the past year, you had some of these larger P2P platforms that shut down. So you had like local Bitcoins shut down, Paxful. I don't really know what happened at Paxful, but it like blew up or shut down somehow or another. And these are kind of like the main platforms that have been used in a lot of, I mean, not just in Latin America, but worldwide to trade Bitcoins in a peer-to-peer way. And just wondering if like, if has this had any, has the shutdown of these platforms like had any like meaningful impact on P2P usage or crypto usage in your view?
They're definitely the biggest platforms. They're not the only ones, and it happened in the middle of the period studied. So next year, are we going to have to reevaluate the peer-to-peer pillar? Yes, absolutely. Like there's about 15 or more peer-to-peer marketplaces, including probably one of the biggest ones, which is Binance peer-to-peer. But next year, we are going to have to totally reevaluate that category. And I've separately been wondering if it's at this point meaningfully different from what's happening on centralized exchanges, or if it's just kind of, I think it's a category that we need to reassess given those closures basically. And we will do that next year. But they're not those two are not the only two that are in that category. And I think Binance has largely captured the market share of those other platforms. And there is still a need for peer-to-peer marketplaces. But I do think that we need to kind of revisit how we think about the role of peer-to-peer marketplaces given the changing dynamics that we're seeing.
Got it. Yeah, that makes a lot of sense. And yeah, I forgot to mention that Binance has, I mean, a lot of people don't realize that Binance actually has, probably the largest P2P marketplace in addition to having the largest centralized exchange. And they've obviously been able to capture a lot of that value, a lot of that volume. So moving on here, one of the things I find really noteworthy about the report, this year's report in particular, is that among the top 10 markets as far as adoption, like the US is really the only one of those markets that would be considered, a quote unquote like developed country or developed economy. And this is really one of the core reasons why I started this Brazil crypto report project to begin with, is just because I felt like some of the regions that are where adoption is happening most aren't getting enough coverage. And but really just kind of interested in, your thoughts on, just given like, it seems like there's a discrepancy between where the adoption is actually happening and like where a lot of kind of the mainstream crypto narratives and like just sort of energy and, thought leadership is focused, right? Where, the last couple of weeks it's been SBF trial, Bitcoin ETF stuff, but like, in these other parts of the world, like there's a lot of other stuff happening. I'm just kind of curious as to like, how do you view this discrepancy? Is this something that's is this like problematic? Is this something that's maybe to be expected? Is this just maybe the people in these other countries just aren't, as vocal on Twitter talking about these things as people in the US? How do you kind of view this discrepancy?
I could not have done a better job characterizing a major problem than how you just how you just referenced that. It's something that I think about a lot, and it's when you're in crypto, we have a pillar of like kind of core company values, and one of them, at least formerly, was strong beliefs loosely held. This is a strong belief that I have strongly held, which is that a lot of crypto activity is totally mischaracterized in the mainstream media. And it is misunderstood, and it's a hot button topic that people are fast and loose with the opinions that they have formed about it. And seeing the major media cover these hedge fund stories, what one CEO said about crypto, what Elon Musk said about Doge, is hard when we're seeing all of this crypto activity literally every day being used by people around the world, just not in the United States, and not creating a Twitter thread with every opinion that they have. And I think that it's kind of a probably a bigger a problem that is beyond just crypto, which is that it's not, and I already alluded to this, it's not kind of a big sexy story that crypto continued to steadily grow in sub-Saharan Africa yet again. Because what day, that's not an event, it's a trend over time. And so it's harder for people to, when headlines move so fast, to feel like that's a major headline. And yeah, this discrepancy is a big problem. And that's why the geography report is one of the most important projects to me and our team. And it's to neutrally show that this is happening and try to raise awareness around the real use cases that are actually happening.
Well said. Well said. And then maybe to kind of wrap up here, we haven't really talked a whole lot about LATAM outside of Brazil, but maybe I'll kind of give you the floor just to maybe talk about anything interesting from the other countries in the region that any other extra color you want to share, like Argentina, Venezuela, Mexico, Colombia, anything interesting that you found in some of these markets that you want to share?
I think that one thing that we try to flesh out is the relationship between currency depreciation and crypto adoption, or policies enacted, such as the Argentinian de-dollarization initiatives. And I think the fact that people can only hold a certain amount of dollars in any given point. And so we associate those two things together. We look at the amount of adoption against the rate of currency depreciation. This is not sufficient at all to answer that question. Like I said before, you need to have a PhD dissertation to tease out a lot of confounding variables that would be impacting the adoption, but we do associate them together in our report, and there is an inverse relationship present, which would suggest that they are related. But if you're a PhD researcher or a master's researcher and you want to explore this, I highly encourage you to take that research on. It's a really good time to be answering these questions. So we looked at the relationship there for Venezuela and for Argentina, and we saw an inverse relationship, which would suggest that people are adopting cryptocurrency slowly and maybe potentially in response to currency depreciation, although again, many, many caveats to that. And we talked a lot to people in those countries who were talking about the need to have a bridge to the US dollar, or the excitement that there is this bridge to the US dollar. I think more than in Brazil, Argentina and Venezuela in particular are responding to specific economic events that they're facing within the country that would not be happening so much in Brazil. And then in Mexico, which was another country we spent a lot of time on, we learned a lot about international payments, remittances, and it's actually a really vibrant crypto market, a lot of startups, a lot of you see people investing and in Mexico. So it's not all about remittances there, although that is always referenced, I think, because it resonates with people who are familiar with Mexico. So yeah, there's a lot to unpack in there. Mm-hmm.
Yeah. Eventually, if you can grow your team a little bit, maybe you can start producing, 100-page reports on each of these regions, right? That would be.
I want to do that. And the funny thing is sometimes after I do these reports, suddenly everyone thinks I'm an expert in every country. So I'll get questions like, what happened in Malaysia in March of 2022? And I'm like, I don't. And then I want to go on a rabbit hole for Malaysia in 2022, but it's just, there's too many countries.
Yeah. Well, I mean, impressive work that you and your team have put together here. I mean, it's really it's hard to overstate just how useful of a report this is and how useful of a data set this is. So really appreciate you putting it together, and then also want to thank you for coming on the show today to talk about your findings. And I'll turn it back to you for any final thoughts. And how can folks get in touch if they have more questions, or if they do want to learn about Malaysia, crypto adoption in Malaysia in 2022?
Okay, so you can download our research on our website. We have a lot of research that we put out. I think there was one day 2 weeks ago where we put out 5 blogs in one day, and not just specific to cryptocurrency. If you want to learn about Malaysia, read our report and then fly to Malaysia and ask some questions and then get back to me. let me know. And yeah, we're just thanks so much for having me. This is always a great podcast. So thank you.
Amazing. Well, thanks so much, Kim, for your time. And thanks everyone for listening. And we will see you next time.